the first I heard about it, I think, was during the whole great financial crisis, the
Mhm.
LIBOR scams,
Yep.
and then SOFR was on the radar, and then kind of disappeared, and then came
Yep.
back immediately.
Obama being the globalist, the good devotion that he is, Geithner being the good devotion that he is, right? They just Yellen, they ignored it. So here's 2017, and we've got Trump in power. We got Mnuchin at Treasury. Not that Mnuchin was any great shakes at Treasury, but he's
Right.
better than Yellen. But all of a sudden, the Fed saw their opportunity, and whoever put Powell in Trump's ear said, no, you need to put this guy in charge of the Fed. Now, Trump being Trump didn't realize that what was happening here. Because if Trump loves cheap money, he's a mercantilist at heart. He believes in cheap money and protection tariffs. Excuse me. But at a certain level as well, like, we had to get off the zero bound. And we had to change the monetary system. Honestly, the best thing you could possibly do to MAGA was implement SOFR. You had to finally cut the cord between the United States and City of London, who had been controlling, influencing far in excess of what they should have been, the American financial system for 200 years, 240 years. I'm dead serious. And I've written about it in the newsletter. First starting with, and it was Richard Poe actually that put some of these ideas in my head, talking about the trade balance between the United States and Europe. And then when that era ended, and then we moved into post-Reconstruction, and the United States started running a trade surplus versus Europe, which was what ultimately built, the America that we're still living off the corpse of, by the way. And then after World War II, we started running a trade deficit with Europe as we started recapitalizing Europe. So all the money so in effect, if you marry that with some of Martin Armstrong's arguments, you've got like, hey, during the 20s, all the money flowed out of Europe because Europe was a mess, and it all flowed into the United States. And they capitalized, and they built the United States. They built the war machine in the United States. They invested in it to fight World War II. And then after World War II, all the money flowed out again. They still control the friggin' money because it's still their money. It's just here in our banks. And then that money flowed back to Europe to rebuild Europe. And then eventually, we wound up going off the gold standard in 1971. Within a few years, we had LIBOR taking over literally the entire globe for debt indexing. So let's talk about that. So what is LIBOR? It was a debt indexing rate. It was a cost of capital rate. So what, you wanted to borrow dollars and, overseas, and you're a Greek, famously, you're a Greek shipbuilder or whatever, and you want to borrow dollars. Oh, what rates for that? Do we have a rate for that? No. And then eventually, well, how about 5%? All right. And then somebody else says, some French guy says, how about I'll sell you dollars for $4. I got all these dollars sitting in my French, my bank account over, I don't know, BNP Paribas or whatever. And then some Dutch guy over at ING says, well, hell, I'll give you 3.5%. And then London says I can go 3.25, and then 3.1, and boom. By 1984, we have LIBOR. And what's LIBOR? 18 City of London banks sitting around deciding on what the cost of dollars will be. And so here's the thing. And this is the conceptual, I think, the hard part for people to wrap their heads around, why this is so important. And why they were actually in control of U.S. monetary policy. Okay? Because it's easy to understand once you're at the zero bound because money is infinite. Money's free, right? But start coming out of the Volcker years at 13.5%, right? And successively we go down and down and down and down in rates. And for 40 plus years, we have a bull market in U.S. Treasuries. And so every time the every time the economy expands, we go through a bull, the Fed raises rates to stop the bull, brings the prices down, and then the cost of capital down. But why do they have to do that? They have to start cutting rates early because as the money is going out, it's getting levered up overseas at a cost they're lending far beyond their means, and they're using the knowledge that the Fed is going to cut before they're short circuiting the natural clearing cycle of the bust cycle, the clearing of the malinvestment from a Misesian point of view, right? So when that happens, and say that let's just use a made up example. Say the Fed has to raise the 6%, 7%, let's call it 7%. And they need to hold, and in order to clear the malinvestment, they need to hold it there for 2 years, right? But about a year into that process, 7% is now strangling Europe. They can't, they've over levered the previous cycle. They're stuck at, and they're running, and they're all going to like go bust if we hold at 7% for another year. So the rate on LIBOR starts to blow out. The cost of overnight money starts to rise. That forces everybody's bank because everybody's scrambling around for dollars. So the bid for dollars goes up. People who have dollars are demanding a higher rate of return for borrowing dollars in the overnight markets. What happens? That blows out. Crisis starts to ensue. Margin calls start to happen. What does the Fed do? Well, the Fed, that's there. Now, when the LIBOR starts to blow out, everybody's credit cards, everybody's credit revolvers, their HELOCs, their adjustable rate mortgages, all of that stuff is indexed to LIBOR. Now, the United States economy can weather 7% far longer than the European economy can, or the British economy can weather 7%, right? But LIBOR blows out and induces a slowdown in the United States economy far earlier than it should, a year into the liquidation phase as opposed to 2 years. You short circuit that malinvestment site, the malinvestment clearing, go back to 4%, which recapitalizes the Eurodollar markets, and we do the cycle all over again, and that's why interest rates keep going down and down and down until we get to the zero bound, until the whole thing blows up. Which was predictable, which Mises would call that the crack up boom. Now, SOFR says, sorry, we're in charge of the dollar. It's based on repo transactions within the domestic markets in the United States. Now, only if the United States has a big slowdown will the demand for money rise above the Fed funds rate, which would then go overseas.
Mm-hmm.
The cost gets borne outwards as opposed to coming back this way. Okay, that's the key to understanding why this was so important.
This really helps. This really helps me understand the anti-globalist perspective here now, right? Because now we're saying it's our dollar, it's your problem.
Yes, it used to be our dollar's your problems. Now it's and the rest of the world is now saying, as Zoltan Pozar said, our commodity is your problem.
Yeah,
and the U.S. is saying, under Powell is saying, that's fine. We're taking our dollars and we're going home. It's okay. We're good with that. If you still want to use dollars, go right ahead, but it's going to cost you 5%.
Mm-hmm.
Okay.
Interesting. Yeah.
LIBOR officially ends.
That paints a. I'm sorry. Go ahead.
LIBOR officially ends on September 30th. Will no longer be quoted. Effectively, no new contracts have been written in LIBOR for months now, and certainly not in the United States.
Meaning it ends globally or ends just in the United States?
Like,
ends
going
globally.
Away. It will not be quoted anymore. Everything will be quoted as a function of SOFR, plus or minus 30% to SOFR. So unsecured debt. I mean, LIBOR will still exist conceptually, but it will be on a contract for contract basis. It won't be. And my friends, my Italian friends over at Montalcino, Marco and others over there were arguing, I think correctly, that what this does is going to ensure that why do dollars or anything need to flow? Why does foreign exchange need to flow through London anymore?
Right.
Why? Why can't it flow through Dubai or go back to New York anywhere. Or why does it need to go through London?
Right.
Because these banks don't matter anymore.
That's interesting. So, I mean, really, you're painting a picture where Jerome Powell pulls this one lever, and it throws the entire, the entire globalist system into chaos.
Yep.
Is that why we're seeing such a ramp up in the chaos?
Yes.
I mean, like,
yes.
right.
Yes.
I mean, he does this, and then
that's why they're threatening us with nuclear war, Paul.
Right.
Okay, like it's
exactly.
and famine and death and disease and COVID and
monkeypox,
and and just killing chickens left and right. Oh, we found a chicken with bird flu. Bird flu happens every year.
Right.
And now they're just like wholesale slaughtering millions of chickens in order to stop bird flu. It's all bull crap. They're trying to destroy the food supply. They want to kill us all. They hate us. Guys, they hate you. Okay, it's like my friend Picanones, another kind of post-libertarian. At least that's what he calls himself. It's like, look, I would rather choose to be ruled by a bunch of technocrats that are indifferent to my existence rather than hostile to it.
Yeah,
and this is where we fundamentally disagree. Like at an practical, pragmatic level, disagree with Whitney Webb. To be honest.
I'd like to hear more about that.
Because I think Whitney doesn't see any quantitative or qualitative difference between them. And I'm like, that's from a doctrinaire libertarian perspective, that makes perfect sense. But the world isn't doctrinaire libertarian. Like there's 50 of you.
Sure. She's really, really great. I love the way Whitney connects all the dots.
Sure.
And has all the receipts, but it's missing a lot of the context.
And I say all of that with respect and honestly,
absolutely,
with love.
She's an integral part to us learning how all this shit works.
Of course. But there comes the point where you have to ask yourself, what does it all mean? And can you really say that these people are all the same? I ran into this.
People can change their mind.
Use the phrase just because they use the same word, they use the same words, or they're doing the same, or they're doing similar things, doesn't mean that they want the same goals. Like I don't for a moment think that Elon Musk isn't more of a free speech guy than Klaus Schwab. Is he a truly First Amendment kind of guy, understands it at its functional level? No. Is he getting there? Maybe. I don't know. Was he a bad guy 10 years ago? Probably.
Or was he the guy driving with the cake in his lap because he had to make Tesla profitable? He had to get SpaceX off the ground,
or is he?
He had some very difficult situations. He had to deal with some people he had to negotiate with in order to stay alive, right?
And to Whitney's argument, he said, "Well, why did you take the money in the first place?" And I would say, well, I would invoke the Walter Block or the Murray Rothbard or some other doctrinaire libertarian big light who would say, "Oh, by the way, every dollar the government has is stolen money that they stole from you. I'm just trying to figure out how to get it back."
So you've heard Bitcoin is the new gold rush by now. As world leaders on all sides have endorsed it as the future of money, and now you're looking to get started? We'll show you how. It's actually easier than you think. First, go to your nearest ByteFederal ATM and turn your cash to coin. ByteFederal has over 1,200 locations around the country with the highest daily limits. Go to our website, ByteFederal.com, to find the nearest ATM to you. Log in to any wallet, then create an account, deposit your US cash, and instantly convert it to Bitcoin. That's it. We are the only US manufacturer and operator in the Bitcoin ATM industry, and our US-based live customer service is second to none. Go on, give it a whirl, and don't get left behind. Click the link below.